Pow pow, this is African Crypto Warlord. Today we'll be looking over some XRP USDT. We'll be following up on our distribution cones with regards to our 7th level, where we're more than likely at. So this is just the distribution cone playing out. Obviously, as you can see, we want to climb up and down by this orange line that's in here, okay? As it climbs up and down, we're waiting for a new flash to happen on our 15-minute. I'll show you the flashes once this is done playing out. And then we're going to look for a new trend, okay? So currently from here, what we can see, we've had our downside moves, and now we're going to go target our upside. And given that we're playing quite high into our upside now, currently today, this weekend, we might look for some levels in which can help set in some bull divs, okay? And furthermore, is that going to pump through? No. And furthermore, what we're going to be looking for is things that can help set in bear div. Okay, so this is where we're currently at. Cones are just about to print a new one. There we go. Okay, so what I can see here is that XRP is currently at a daily VRE level. I thought it would be better for me to make this stream once we hit this yellow line, okay? Because then from there we can make decent, long-lasting predictions. All right, so the general idea being is anytime we have these yellow lines, we're looking to pull back. So yesterday was one of the very few days in the crypto market in which we didn't come and test our daily mean. We completely stayed away from it, as you can see down here. Shoop, and then pushing through. And we stayed away from this yellow line. So obviously we're going to have to pull back here. And the general idea being is, just off this general observation for the weekend, if we fail this red line, we're going to hit this PB cone. Okay, we fail this PB cone, we're going to hit the monthly mean, which we demarcated earlier yesterday. All right, monthly mean might be touched sometime on Sunday, will be 3470. All right, today's daily mean is 352, and then yeah, all you got to do is open and close a bunch more candles above your daily mean for the next 15 odd days, and then you lift your higher mean, okay, your monthly mean. All right, so let me turn off VRE levels, let me put on reverse wave trend. So this one's pretty nice. I'll put this on the daily so that you guys can see. All right, so this is our reverse wave trend, and the general idea being is when we're outside of it, and if we can carry on being outside of it, there's a good trend. And then as soon as we break back through it, it's going to want to come and hit this level or this level, right? This jaggedy level, this jaggedy line is for that jaggedy mean. These straight lines is for that little jaggedy mean. And as you can see, we have some confluence here just on our reverse wave trends coming and scooping up. So let's go look at what our 15-minute momentum oscillators are saying. And as you can see that they sort of line up quite nicely. We have an outlier event here breaking through. Next best, so it will be, this is a 45-minute orange line over here. So we'll go look at the 45-minute to see if the 45 minutes got positive or negative drift on it, to see if it's going to kick us up furthermore through the weekend, or if we're just going to dump from here. All right, this is an easy little play, outlier events, blue flash off, and then first standard deviation has been hit to the upside. I've heard a few people say too many tools is bad, but if you set them up so that like 0.01% is your lead, and then you have like 7 indicators, well then you know that 0.07%, all your indicators should be looking the same, all right? And if you figure that out, it's 7 out of 10 trades. Yeah, a lot of people can look at it and get analysis paralysis, but if you know how the ebb and flow of your tools match up, and you have your heavier weighting on, let's say, a volatility tool like here, Shannon Entropy, for example, you'll know that your Shannon Entropy, your volatility indicator, is going to be dragging your momentum indicator, like your stochastic, for example. This is a return oscillator, which is calculated in percentage returns. All right, so I know that if this is in positive drift or negative drift, that this is going to take a long time to mean revert. As such, we might have more bearish or more bullish until a phase happens, and then from there we can move on, right? Usually when I see that the tools aren't lining up, or more so for me, waiting for them to speak the same language, you'll see a bear or a bull div put in. Generally about it, right? So to have enough tools to know when these bulls and bear divs are going to be set in is also quite a powerful advantage. All right, so the general idea being is this one's quite safe for now. If they do close it above this mean, then this is front run. Okay, so then Right, so like now this is too much of a pump for me off of something like this. Now I can see it's going to get front run, more than likely going to get sold out at this orange reverse wave trend that I have over here. Alright, let's just throw up some PB coins. Once again, yeah, so that will be your failure point if you get front run on your PB coins. Cool, so what we're going to go do now is hit our daily mean. Now we're going to go fit some other tools to the game. Alright, so the general idea being is 15-minute contracting was positively correlated. This needs to turn around. So our dump has ended. How do I know that? Because we've broken through our outlier, we've broken through our trend wave over here. Our lock it in trend. Okay, if it's in there, we lock the trend in. That's how I look at it. Alright, so we're starting to expand now, positively correlated. This would have been better for the next candle so it doesn't get front run. Alright, so that's 15-minute done. 15-minute done. Let me leave some levels on here like our UMP. Because our UMP is going to be easy peasy for the weekend. We can observe just our general ranges for now. Okay, PB coin is off. Same thing, outlier event happening. This one's a bit confused. There is still a little bit of push to the downside. If this little green line, I don't know if you can see it here, if that goes red, then this is going to definitely continue down to the monthly mean kind of thing. We already demarcated the monthly mean 2 minutes ago. Alright, 45-minute. There's nothing healthy on the 45-minute right here. That thing's mean reverted. Expansion, the only thing that's really sort of slowing this down, we've got to go hunt for positive drift. This wick is very big, so we'll go look at our 5-day positive drift. Expansion, whilst positively correlated, does mean down, but because our Pearson correlation is sloping down, it's not going to hit as hard. Okay, and in the same breath, that's when you know that positive drift has the ability to buy it up. And how do you have positive drift? When you have two indicators, right? And the general rules between them. Okay, that's a volatility indicator, and that's just my Pearson correlation. There's 6 rules to this game. Trading volatility. 90-minute. 90-minute also looking to mean revert, worth some expansion to the downside. So maybe we have some follow through to the monthly mean. Let's just go pull up the monthly mean so that we can see. That's your monthly mean at 3470, which we demarcated, but I'm going to be guessing we're going to hit the monthly mean in 1, 2, 3, 4. About 4 prints on the 90-minute. Why do I say that? That's because my UMP will be coming in and crossing my monthly mean. Be a good place for liquidity to be. And generally you're going to go hunt liquidity, especially if there's no liquidity on the weekend. Alright. Okay, so we've demarcated the monthly mean. So 3 hours also looking like it's wanting to push a bit down. We've got to see what's going to turn this candle into a doji right now, which is perfect. I love that we've come in, we've touched the daily mean. We just keep on lifting up, lifting up, lifting up. So the lower term time frames, everything from above the 15-minute to where we are, the 3 hour now. So 30-minute, 45-minute, 90-minute, bearish, 3 hour, bearish, 6 hour. Super scalpers come in. So we can look for a little bit more follow through on our 6 hour, right? Given that it's hit the daily mean, I'm going to be guessing you will see a denied mean reversion to the downside if we close above this daily mean. So another like 3 prints, alright? 12 hour. Generally I'm going to start looking for that 6 hour there. So 12 hours looking alright. Now this is why you have a bunch of tools, okay? They don't all tell you the same thing. They tell you little bits of your story, which if you don't know, to you might be the same thing. Okay, so the general idea here is this will be a good example, right? So we can see that our momentum oscillator, or people who don't have this package, you could look at this like the RSI, the stochastics, or whatever, right? That thing that you put your trades in on. What is negating this to the downside right now? And the reason why it hasn't dumped all the way through is because we have positive drift in the book, okay? And we've lost our trend. So how do I know we have positive drift in the book? Contraction and volatility whilst negatively correlated. That means volatility is going down, okay? Pearson correlation says that price action is not correlated to the same direction as volatility, which means it's an inverse rule, which means price action is going up if it's not matching the direction of the volatility. And volatility contracting, price action going down, and then it says, is that correlated? No. So then you know it's going to be the opposite flip, okay? So it's just a general idea. And because of this positive drift, there's going to be a lot of people that might be caught out here up in this top range this weekend, okay? 24 hour, we're going to go look at our JMA. So our JMA is the guy that we were hunting for yesterday, and it looks like we're closing above it. Well done. I love it. So expansion, okay, so you're going to need those 3 hour, you're going to need from anything above your 15 minute to your 6 hour to turn around, alright? And once that happens, you'll have the opportunity to easily break through this previous high. Like, it will have the genuine amount of steam in the system to give it the legs to set a higher high, right? Not just come up and match it and then have a bear div form, or just barely match it and have a bear div form. Okay, 24 hour is having its mean reversion phase. Obviously, as you can see, it's quite powerful. We just generally waiting on a little bit more. I'd say if this thing opens and closes just at 3569, that triggers this into no sideways motion. We carry on with a pump up. So there's nothing really in between intraday time frames that's sort of holding this up. So this is why we have to go look in on these higher term time frames, because what kind of trade are you looking for, right? I'm looking for something that's going to set me in the market. I've been buying in at 0.3333, okay? And if I can manage risk in the day, I'll manage risk in the day. But if I can't and I'm asleep and this thing goes to 32, it's not the end of the day, because I know 5 day, okay? So 3 day is looking to mean revert. So the general idea being here is you close the next 2 candles on the 3 day above this demarcated area here, 3462, which is a good pullback area. Let's see if our monthly mean is in this area. Yep. So our monthly mean is in this area. So we're going to expect a touch at 3461. All right. And why I say that is if we don't hit that touch at 34661, there's not going to be enough steam to break the previous high. All right. And that's because the volatility indicators, they have an ebb and a flow. Okay. So 5 day. And 5 day contraction. This thing's still doing its job, in a very high phase of contraction, looking for a new trend whilst positively correlated. Okay, what we're gonna have to be observant of here is this is still a very high column, and Pearson correlation is coming into mean revert. Right, so the next best alternative is actually negative drift. So what I would be looking for here is maybe a candle down, and then the next candle would be up. So that's 10 days worth of price action if we don't break out of this range, if we just hover here. Okay, so 5 day, 7 day, we throw up 7 day. 7 day is looking a little bit more easier to read, I'm gonna say. So we have some contraction, positive drift. That's what we was talking about now. Contraction, whilst PC is positive, which means negative drift, sorry. And that's the sort of thing that's gonna back up the 5 day time frame that we were just looking at. All right. Let's go start throwing out some levels. Then we're going to put on the 21 day just to show you guys how nice the 21 day is. Okay, so I will load up new data, but our 21 day is making a little bit of a doji. We're sort of moving into our outlier event, 1 day in 16 hours. So generally this would be quite nice. If this thing closes this small, the outlier event, if it does continue to the upside, which I'm guessing no blue flashes, we've had our first outlier ended and mean reversion. That's just 3 of the tools lining up with my general trend. Okay, if we do close a candle this big, the next candle to print is going to be very easy to send us outside of the outlier event, and anything outside of the outlier event, I'm going to be guessing is going to break us above 3.8. Okay, 381. So let's go generalize for some targets for today. We'll go put it on the 15 minute. I have to redo the. Or not, maybe not. That's how I know I've been here just enough amount of time. No flashes, some outlier events, a little bit of flashes here. No flashes, okay. So just reset this guy, make it big. I just want to make sure that this data is at the right place. Always have to do this. No, it's not. So it needs to go 1 candle back. 1. So as you can see, that's 531 15-minute candles that from the past that this thing has started. Okay, so here's a general idea, and we'll be fighting over our daily mean. If we're to put that on right now, VRE mean. Cool, so we smoked our VRE mean. 2 candle closes above the JMA, and we'll look for continuation into 3568. I'm not going to put out some unreasonable, stupid targets, But what I would like to do is just say that is the 15-minute distribution cone mean. Okay, so if we do come down here, we're not going to hit this one. We're going to hit this line over here, which is at 3270. Okay, so where we're at now, we're at 1, 2, 3, 4, 5. So we smoked the fifth. So if you keep above this level, you'll more than likely break through this one and push to the upside. If you can't break through this one, you're more than likely going to go target your daily mean. All right. Let's put on our reverse wave trend over here for you guys, and then I'll do one nice last shuffle. I meant to show you guys this on the 24-hour, just so that you have like a very good understanding of where price action is within your mathematical model. Reverse wave trend, that's general, so that's our mean over there. Let me go put on the 24-hour. 24-hour is looking like it's quite a decent time frame in current market conditions. Alright, so we're going to turn that off, give reverse wave trend just a minute to load. Let's see our UMP. So we have demarcated a region to a monthly pullback, okay? A monthly pullback, alright? So that's our VRE. So this is your general idea, right? So on my reverse wave trend, if we've reversed through here, we've hit the mean. I would say the best place to fail this thing so that there's guaranteed steam to the downside is at 3723. Okay, 0.3723. But you start closing 15-minute candles above this, and stuff like this starts to happen. The inverse, all right? The inverse. So as you can see, when you start closing candles outside of the orange line, it really can sit there for a long time before it comes in, and that's a lot of price action, all right? So that's coming from 75 cents. All the way down to when we re-entered 31.82. So this is a general idea, right? Once you start closing outside of this reverse wave trend on the 1 day, you're going to be looking for your higher term time range to start mean reverting to the upside. Given we can already see that the 21 day is mean reverting to the upside. Okay, I hope this was helpful. So your weekend range would generally be we'll do it on the 6 hour, because the 6 hour is the one that I need to turn in order to know what a lot clearer data. Okay, 6 hour might carry on dragging through, considering we haven't had these two cross. Let me put this reverse wave trend on. Come baby, today. Cool. So there you go. So there's a few things lining up with a little bit of a pullback today. We'll more than likely have the pullback once reverse wave trend and UMP cross, but will that be at our monthly mean? There you go. It is. So we've demarcated this region here for today. General idea being is you hold above there, you'll have the steam to mean revert that 21 day to the upside that we're just looking at, right? Which closes in 1 day and 16 hours. So it closes on Monday morning open. Closes on Sunday for Monday morning open. All right. That looks true if you carry on closing above 3467, and then from there we'll let the ebb and flow of volatility come through and let the 21 day expand to the upside, because currently it's sitting with positive drift. If I was to go show you it on Poloniex. I hope this was helpful, and yeah, have a good day trading, or have a super chilled weekend. Don't FOMO in too much, but that's your downside target. Okay, close below that downside target over here. We'll look for some continuation to the downside. Come in, bounce it, we'll have enough steam for the upside to break a previous high, at least by Sunday evening, Monday open, with regards to 21. We want that 21 day to stay as a doji, so that the next set of data is very easy to pull it up through its outlier event. That's simple. It stays at a doji if it doesn't break through this region. Ciao Bella, I hope you guys trade well. Much love. African Crypto Warlord out.